SD Bullion has just launched Survival Food, headlined by the only 100% organic, GMO-free survival food. Prepare like the Doc. Purchase your survival food from SD Bullion today.
Metals and Markets is sponsored by DNA Precious Metals, a near-term producer of the Montauban tailings mine in Quebec, Canada. DNA Precious Metals trades on the OTC BB market under the symbol DNAP.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, Eric, it's another non-farms payroll Friday, another gold and silver smash about 7 to 10 seconds before the announcement. But surprisingly today, the cartel wasn't able to get any follow-through at all to the downside. Silver smashed about 20 cents down to 1940, but quickly bounced all the way back above the previous highs of the day towards 1980 before consolidating the rest of the day around the 1950 level. Really the same thing for gold. We saw the move start just seconds before the official release of the non-farms payroll. Gold smashed down under 1220, but was unable to get any follow-on selling and head towards 1200 towards a retest of the lows near 1180 and closed the day right around 1230, so about almost $20 off the lows for the week. So both metals, did have quite a bit of paper selling early in the week on Monday and Tuesday. Somewhat of a recovery here, and cartel unable to see any follow-on selling here on Friday with the non-farms payroll release.
Yeah, and I'd like to throw out an open question to anyone in the listening audience. Can you think of a single occasion when there's been a front running to the upside with gold prices in advance of a non-farm payroll release? I mean, I can't. I did attempt to dig through some records and look through, but that combined with just based on memory alone, I can't think of a single time that's ever occurred within the last decade. I'd be really curious if anybody could dig up an example about that. Maybe we should put in a call to Bart Chilton before he leaves office. He can maybe fill us in on that. But we'll include some graphs for that out of an annex that were published in Zero Hedge, and you folks can see that. It's pretty telling. Any time that they release the non-farm payrolls, it usually is a cartel crash day, and quite frequently within the last 6 months we've seen front running of it as well too, which is indicative of the information getting out there. Or maybe, I guess, somebody could make an argument that somebody is bold enough with their free cash to make a big bet without knowing what the heck they're doing. They're just putting chips on black or red, as a roulette player in Vegas might do, so to speak. But the interesting thing today was that despite the early downside moves, gold and silver did stabilize, and the market was, all markets actually were just kind of atypical in their trading. I mean, the basic message, if we are to believe the numbers produced by the Bureau of Labor Statistics from this non-farm payrolls report, would suggest that the Fed has a stronger argument to make their so-called tapering, but the market doesn't seem to be pricing that in, and that's what the tale of the tape from various market actions and the pricing today suggests. So who knows, maybe that speaks to the fact that more and more people on Wall Street are beginning to come around to the perspective that a lot of people within the precious metals community have, that the Fed doesn't have the maneuverability to do tapering because they have to support the bond market and they have to support the dollar and they have to continue on this whole facade of supporting the banking industry. So that may be one of the takeaway points from today's numbers. It remains to be seen. One interesting thing, too, I should throw out is that the birth-death model kicked out 15,000 jobs to the negative in this report, as opposed to adding 126,000 jobs created out of thin air in the previous month's report. So, all of these economic statistics that are being reported have a lot of chop in them. There's contradictory numbers, and it's really a confusing kind of environment. I mean, we all know that a great deal of these numbers are massaged, but they're creating a picture that is not clear even if we take them at face value because they're contradictory. I don't know. It's a very strange time. And then when you look at the extent to which all of this fiat-created money with the Fed purchases of $85 billion per month has, impacted the stock market, and the stock market in turn, with just but a few examples of statistics that show floppiness are things like the margin rate in the New York Stock Exchange never being higher, and very low volumes and concentration of upside with certain number of stocks with the thinly traded market indicative of a market that's not healthy, 80+%, sometimes 90% daily action being just computer trading, and on and on and on. And all that possibly even goosing, consumer confidence reports, because the stock market tends to be what most people look at when they judge whether or not they feel confident about the economy first and foremost, and that came in at a record high today. So, it's unusual to say the least with all of these confluence or these contradictory statistics that are being reported. But bottom line is that so far it looks like the market may be beginning to draw some skepticism about this whole tapering nonsense. And we'll see how that plays out with metals, but if anything, that's probably a positive going forward.
Yeah, and it's interesting that, gold and silver refused to break down on all the speculation of taper back on today with the non-farms report that the bond market really is nearing panic mode, jumping up today. I think it neared 2.9% on the 10-year.
Yeah, it got just over it for a brief period of time. That actually speaks exactly to the same thing, that the market is skeptical of all this tapering nonsense. And if the Fed tapers, then that means that there's less incremental flow to purchase bonds, which means that the yield will go up. And the market is suggesting that picture. That's another point
exactly
that speaks to that same picture.
And I think it's the physical demand that's supporting gold and silver here. The trading action certainly seems to indicate a double bottom. I'd like to be a little bit cautious here with the December FOMC and Bernanke's last meeting here, only a week and a half out. Certainly can see throwing one last attempt to smash gold back under 1178 and silver under 18 at that meeting. Certainly that has to be something that the Fed would love to do if they can keep gold and silver down near this level for another week and a half, to have that opportunity to have a big algo smash on the FOMC release, and then get all the algos to kick in piggyback the momentum to the downside, which would, if that did occur, likely send gold towards 1100 or possibly even 1000, and silver probably towards 16. So just due to the December FOMC a week and a half, it's a little premature to call a bottom, but the physical demand has just been exponential coming out of the woodwork really here in the US as well as globally, with gold under 1250 and silver back under 20. I know at SD Bullion we had the second biggest sales day we've ever had on Monday, and a little of that probably had to do with all the Cyber Monday sales, but also just throughout the week there's been numerous deep-pocketed buyers that are coming into the market, that they've been on the sidelines or invested in other things, and they're letting us know that at this point they're ready to allocate a larger portion of their wealth or savings into physical gold and silver. And especially in silver, the premiums are starting to reflect that. The Eagles continue to rise in premium, and once again there's only one more allocation week from the mint, and then they'll be shutting down for 6 or 7 weeks. Silver maples have finally started to move a little bit to the upside premium wise, and then the 90% jumped up quite a bit, probably about 50 to 75 cents an ounce this week, and again is pretty much unobtainable from most of the the U.S. Wholesalers. So physical demand has just exploded with gold under 1250 and silver under 20.
Yeah, and even the trading this week suggests that there are big buyers who are looking to step in across the board, even on COMEX. So, it costs a significant position for the cartel vis-a-vis standing inventories on COMEX, and we have a very large possibility this month where they need to come up with 400 plus tons of gold just to meet the possibility for people who are going to stand for delivery. So when they push prices lower, that could conceivably hurt the ability for them to manipulate going forward. I mean, I'm not suggesting that COMEX would have a complete default at this point. But a kind of pressure is something that limits the ability of the cartel to act, and that's here. And speaking to physical market demand as well, we probably should toss in some interesting news that was reported that confirms the discussion that we had with Alistair McLeod about a month and a half ago or so when he was on our show. And it comes from Alex Stancic, who is of Anglo Far East Bullion Company, and he was interviewed by GATA's consultant Koos Jansen, and it was reported in ingoldwetrust.com. And he was relaying discussions that he had along with Jim Rickards, who's a board member of that company, with Swiss refiners. And he spoke to one refiner who's the largest refiner in the world, and the manager of the refiners, with some 37 years of experience in the gold market, indicated that he had never seen conditions like this in the physical market, that they were running 3 shifts, 24/7, which is exactly what Alistair McLeod's contact had told him at the time. All of this activity basically is, for the most part, focused on servicing the demand coming out of China, and they were even at times unable to source physical gold. And in addition, they were recognizing bars that were showing up with stamps that indicated that the bars were produced in the 1960s. So they're really truly scraping the bottom of the barrel when it comes to trying to source gold worldwide to feed this insatiable demand coming out of China. And that really is an incontrovertible data point that proves that the physical market is incredibly tight. I mean, a lot of people constantly point to the pricing on COMEX and the pricing in the London bullion market and say, well, hey, how can you come up with these crazy notions about a tight marketplace? Well, when you're dealing with COMEX, ratios of 80-1 paper versus physical inventories, and who knows what it is on the LBMA, it might even be worse. The fact remains that the paper gods of the cartel can manufacture prices that have no connection to the physical reality. And at some point, that game cannot go on. It will have to reflect physical reality in the marketplace, and particularly when, on a going forward basis, gold mining companies and silver mining companies are going to have a hard time producing when they're getting paid less than what it costs them to pull the stuff out of the ground. So it's just a matter of time, folks, before this whole thing turns around. And it probably won't skyrocket, and maybe we'll see an evolutionary process over the course of 2 or 3 months where gold and silver will go up 20% in 2014, and starting a bit in this last month of 2013 would be my guess as to what's going to unfold. But the cartel's grip is nonetheless ever present, and we see it this week, and it's just something to factor in when it comes to how you go about looking at your position, both as insurance and as a speculation. I always tell people that they should never part with an insurance position that they've established, and then if they want to be more aggressive, it really just boils down to the degree to which they can sleep at night, because these markets are extremely volatile. But at the same time, if one has a long enough time horizon and is willing to deal with that volatility, at some point the investment thesis certainly is going to play out, because the supply and demand metrics in this situation are just completely ass backwards. I mean, China is taking down probably at this point 2 to as much as 4,000 or 5,000 metric tons of gold this year, and that is completely off the radar of the mainstream Wall Street perspective. But it is nonetheless something that can be proven by data coming out of Hong Kong and other places.
And speaking of volatile markets, Bitcoin has had quite a volatile week here after an amazingly volatile to the upside November. Due to a couple of news stories out of China. First, China's central bank came after it yesterday, and then today, on Friday here, Baidu announced it would stop accept Bitcoin for its music service users, and they issued a statement basically saying that due to the big price fluctuations on the price of Bitcoin, they would no longer accept Bitcoins in exchange for the music services. And I think Bitcoin is down about 30% on the news of those two stories overnight Thursday and early Friday, and back under 900. So it'll be interesting to see if it's just a mere hiccup, or if we get a little bit further out, looking back at if China may have pierced somewhat of at least the bubble here over the last 6 months in Bitcoin.
Yeah, China's notorious for being prone to speculation when it's whether it's their stock market or the property market. The Chinese people love to speculate when the market begins to move, and they follow price signals. And it's probably fair to say that at least 2/3 of this latest upside explosion in Bitcoin has been directly the result of Chinese-based buying. And it takes I would say based on their previous periods of high frothy market activity, like for example the 2002 to 2006 window in their participation in the Shanghai market for stocks, and the ongoing speculation with real estate and whatnot, that Bitcoin will continue to have a pretty strong draw for people in China. And the fact that China's woken up to the Bitcoin market will likely see just further volatility coming in, and the authorities will probably crack down on it in more ways than they've done thus far. But the bottom line with Bitcoin is that its market capitalization is so small at this point relative to the titanic size of global capital flows that it's going to continue to move higher, but it's going to be an absolutely insanely volatile market. I mean, we could see 50% swings on a weekly basis every single week for the next 6 months. It's going to be fascinating to watch how this evolves.
Bitcoin's not the only thing that China is causing some volatility in, Eric. They continue to escalate the issue with Japan over the Senkaku Islands and their territory there. Neither one is backing down, but particularly the Chinese seem interested in continuing to escalate the issue.
And from a geopolitical perspective, it's really important for them, and it's why they're pretty adamant when it comes to putting their foot down, saying that this is something we're not going to back down on, because when you look at the whole airspace area, it covers roughly about 1/3 of their eastern coastline and the China Sea outward towards Japan. That area has been long considered to be very prospective for having lots of oil and gas reserves, but more importantly, the airspace above it governs how China will have freedom of maneuverability with their effort to expand their blue water navy. And that's really the big issue here. It's not the airspace, but in fact it's the coordination of airspace with naval power. And as China develops and flexes its muscle on a geopolitical basis worldwide, that huge section of territory is important for their ability to manage their naval power. And when we look at that story, that's really the background to it that people need to keep in mind. So with that in mind, I would say it's very unlikely that China is going to back down, and there's got to be some kind of compromise that comes with Japan and the United States and China as the primary actors in that skirmish. So we'll see how that evolves if both Japan and the United States take a firm line as well and are not interested in backing down. That could get ugly. So
Quickly.
Keep an eye on this.
Okay, so we'll keep an eye on that. We'll keep an eye on the gold and silver markets. The strong action today in the face of an attempt for the cartel to really break down gold under 1,200 and silver back towards 1850. We'll see if they can get some momentum to the upside next week, again with the FOMC meeting only a week and a half out. Be a little bit cautious here over the short term with the risk of the cartel doing their thing on Bernanke's last FOMC meeting. I believe it's the 17th and 18th of December here. But again, the physical demand is continuing to support the prices. The tail can only wag the dog so much when you have unprecedented demand, with Switzerland running 3 shifts at all-out capacity to all the refiners, and as well as everything we're seeing here in the retail and the wholesale market in the U.S. Massive demand with the further they push price down, and I really can't imagine what the demand is going to look like if they push price down any further. We're going to see shortages like we saw throughout the spring and early summer, and perhaps worse, honestly. So it'll be interesting to see whether they let the foot off the gas pedal a little bit here and let the metals move back up to and relieve some of the physical strains, or whether they do try one last attempt to trigger all the momentum traders to pile on if gold were to break the lows of the summer near 1178, 1179. So we'll keep an eye on that, as well as the physical demand. So that should do it for this week. Once again, for Eric Dubin and the Doc, thanks for tuning in to the SD Weekly Metals and Markets.
SD Bullion.